of the most popular and best trading strategies to use for crypto, forex, and stocks? If so, you came to the right video. In today's video, we'll be discussing exponential moving average, where you can predict the future trends, the current trends, and how far the trends will go up, when to buy and when to sell. Let's get into it. So, to begin, I want you to go to CoinMarketCap or some kind of stock or forex trading platform. But in today's video, I'm going to be using the crypto trading platform known as CoinMarketCap. And in particular, I'm going to be looking at the Cardano cryptocurrency, and we'll be predicting its trends. So, once you get onto this screen right here, if you were to click on one of the cryptocurrencies, you'll see that you get a new section which you can click on a bunch of tabs, and I'd like you to click on Trading View on the top. Once you click on Trading View, you're going to get this screen right here. And once you're on the screen, I want you to look at the top where you see Technical Analysis and look at Indicators. And once you see click on this Indicators, you're going to get a bunch of tabs or buttons which you can click on different indicators which could be used for different strategies. But for today's video, we're going to be discussing the exponential moving average, which you can find by typing MAE, which stands for Moving Average Exponential, or you can also say it as the exponential moving average. So once we find this on our screen, we want to click this 3 times. 1, 2, 3. Perfect. Once you have this down, I want you to go over to this tab where you can see on the top left of your screen, you're going to see 3 of these EMA show up on your screen. And I want you to hover over one of them and then click on the Settings tab. Once you've done this, I want you to click on this color right here, and I want you to go down and click on the thickness and change it to the second one right here. And then once you do this, you want to click the X in the top right, and then you go back to the next one, the second EMA, and I want you to now go to the Inputs section and change the length to be 25. And once you do this, you want to change the color so that you don't get mixed up between the lines, and you want to change this to whatever you want. But in my case, I'm going to be changing this to green, and I'm going to be changing the thickness to the second one. And then I'm going to be going over to the last one, and I'm going to change the color to be red, and I'm going to change the thickness to be the second one. And then last but not least, I'm going to change the inputs, and I'm going to change it to be 100. Alright, now your trading strategy is all set up, and now we just have to learn how to use it. So in the next couple of minutes, we're going to be looking over some examples on this and how you can use the EMA to predict future trends and how far the trends are going to go. So let's get right into it. Before we begin, I just want to go over how you can read it without looking at the price itself. So as we just looked over just now, we created a blue line, a green line, and a red line, where the red line is the 100 EMA, the green line is the 25 EMA, and the blue is the 9 EMA. So, how can we predict the price using it? So, the most popular strategy using the EMA is by looking at where the red line is. So, the blue and the green are usually right next to each other. But when the red line goes and crosses above it, and it goes above both the blue and the green line, that indicates a bearish trend. And remember, the bearish trend means that the price is going down and will most likely go down in the future. So, I'm going to repeat that. When the red line goes above and crosses over the green and the blue line, that indicates a bearish trend. But it's also vice versa. So when the red line was above the green and the blue, and it crosses under and goes under both the green and the blue, that indicates a bullish trend, and the price is most likely to go up. Alright, perfect. Now that you understand those terms and how you can actually read it, we'll get into the first few examples where you can get the best knowledge on the EMA trading strategy. Let's do it. In our current situation, we see that we have the red, green, and blue lines. And just a little bit ago, we had the red line under the blue and the green line. So that indicates, if you remember, that indicates a bullish trend. And as you can see, the price did go up. But now our goal is to figure out what is going to happen now. So what we can see is that the red line has just crossed over the green and the blue line. And therefore, that the next trend is most likely to be a bullish trend. So right now, we see that the blue and the green line are crossing over the red line. and the red line is crossing under the blue and the green line. Therefore, that indicates a bullish trend, and the price is most likely to go up. So say this the crypto trader that noticed this says, okay, I'm gonna buy, right? And they predict the price to go up. And as we can see, in the next couple of days, the price most definitely did go up, and it increased a lot, and reached a total price of $3.1. So, for the next one, we can see that the red line is now under the green and the blue, which indicated a bullish trend. And now, we want to know when it's going to go down, and when the price is going to go into a bearish trend. So, as we can see, the green and the blue line are about to meet with the red line, and are most likely going to go under. And as soon as we see that the blue and the green line went under the red line, we get out of our trade and we exit immediately. As you can see, the price did go down, and the EMA was correct, and this predicted that the trend was a bearish trend, as the red line went above the green and the blue line. So, therefore, using those two examples, we can notice how when the red line is under the green and the blue line, that indicates a bullish trend, or an uptrend. But when the red line is above the green and the blue line, that indicates a bearish trend, and that the price is gonna go down, or has gone down. Alright, let's move on to the next example. Alright, for our next example, I went into the 15-minute time, where it pretty much shows that for each candlestick, every 15 minutes, each new candlestick will be made. So for this example, we'll be trying to predict what will happen with the price in the next couple of days. So what we see here is that the red line is about to cross under both the blue and the green, but once the red line crosses the blue, it doesn't quite reach the green. Therefore, as traders, we don't want to be risky, and we don't invest here. But if we look over, just a couple of days later, the price does cross under the green and the blue, and the price goes up and reaches a price of 0.89, right? So what we can see from this is that the price, once it crossed just the blue line and not the green line, that does not indicate a bullish trend. It has to cross both the blue and the green line. And once it did, the price did end up going up. But just after that, we notice that the red line is about to cross both the blue and the green. So, what we do here is we predict that the price is most likely to go down as the red line is about to cross over both the green and the blue, which, if you remember, indicates a bearish trend, which is about to occur. And as we can see here, what happened in the next following days is the price then decreased all the way to 0.2662. So therefore, we just realized that since the red line has crossed both the green and the blue, that indicates a bearish trend. And yeah, perfect. So that's exactly how you're capable of reading how the EMA will show you whenever a trend is about to happen, what kind of trend it is going to be, and how long this trend will happen for. Thank you very much for watching. I hope you have a great day, and I hope to see you again soon. Thank you.